But viewers, on that note, we'll shift focus and take it across to the National Stock Exchange, where the management of Lenskart is currently talking minutes ahead of their listing today. Okay, we'll go there in some time, but just to sum up the conversation that we've had with Uno Minda right now, they're not seeing any rare earth issue in terms of their supply pipeline. That's looking good. The outlook is also looking very positive going ahead, and that stock is up 3.5%. I believe we do have the management of Puravankara now joining us on the show. We have Mr. Mallanna Sasalu, the CEO of the South region of Puravankara, joining us on the show. And let's talk about your earnings first of all. While revenue has surged 30%, your losses have also widened on a year-on-year basis. If you could help us get a better picture on what is weighing on the bottom line this time around?
We've done around revenue of 663 crores, which is around 23% up from the previous quarter, and also 28% up from the quarter from the previous year. So basically what has happened is that we're spending around 1,000 crore rupees on our construction, and 150 crore rupees we spend on marketing and overheads for the purpose of the business which is ongoing and which is quite robust in terms of the new launches. The preparation of the new launches will always have the expenses, whereas on the other side that we had given a guidance of around 4.3 million square feet to hand over, we were able to hand over only 1.3 million square feet. And most of this handing over is coming from Bangalore. And Bangalore has some issues in relating to e-Khata and registration, and also the coordination between different department software. So because of which that we have not been able to hand over. As of today, that we have almost 1,250 units. Snags have been already been corrected, and people are waiting for registration. And I think the losses that what you're seeing is only a postponement of what should be the actual results. And you will see by the end of the year that we should be doing much better than this one.
Okay, and give us a sense. Hi, this is Harsh here. Give us a sense as to how demand is shaping up for you and how pricing is shaping up for you in your key markets, because we've seen a sharp uptick in pricing over the last few years. Are we able to build on the kind of base that we currently sit on? Give us a sense.
We're quite bullish on what the market is going. The market is doing in recent past, in the last couple of years, and we ourselves we've seen somewhere around 18% price increase in our sustenance project, and as we are looking at going forward, I think the demand is going to be robust, and it's only because of if you look at what's happening in the commercial offtake, it's fantastic, and I know the key markets like Bangalore, Chennai, Cochin, and Pune are really in a leasing spree. So I don't see that there is any big problem in terms of the demand. Yes, if there is anything to be said about, will there be a 30% raise, 40% raise in the prices? Maybe not, and we're quite comfortable with the situation we are in today.
Okay, so that looks good. Let's talk about your pre-sales and collections. Both have showed steady growth on a year-on-year basis. Now, while you've just spoken to us about demand, also talk to us about the recent projects that you've added worth about 9,100 crore in terms of GDV during the first half. How are you funding this aggressive land addition, and what impact has that had on your overall net debt level?
Our net debt is at around 2,800 crore rupees. It continues to be there, and considering that we have a portfolio size of more than 32,000 crore rupees, and I'm very, very comfortable with the debt that what we have. Even in that net debt of 2,800 crore rupees, we have around 700 crore rupees attributable to our commercial asset. That's 2,100 crore rupees is the net debt on the residential side. If you look at our collections, and we are close to 2,000 crore rupees of collection so far, and that is backed by the way we are spending on the construction. So far, we have spent around 1,000 crore rupees on construction this year. So on the debt side, and we are very comfortable. And so asking about, you asked about our, how are we going to find the capital for the projects which are coming up. If you look at it, that we've got around 13 projects in South and 3 projects in the West to be launched, and in 13 projects, 9 are coming from Bangalore, and rest of their 2 or 4 projects are coming from Cochin and Coimbatore. So there is always an internal accrual. There's always that leveraging of what our assets are doing at this point of time. And of course, that the financial partners are there for us. And as you know that, we have a financial partner in HDFC. We closed a deal with them, 1,150 crore rupees, and there is still unused money. So we are quite comfortable in our cash management at this point in time.
And Mr. Sasalu, let's talk about some of your major developments in the quarter gone by. You've secured a major redevelopment project in Mumbai, which includes Malabar Hill, Chembur. Together, their GDV is worth over 4,000 crore rupees. If you could share some timeline by when these projects will be handed over, and by when, more importantly, the revenue from these projects will be recognized in your books.
It's usually that these things take time. That, as you know, that we've closed around 5 redevelopment projects in Mumbai, which are Upnagar in Lokhandwala, Deccan Pali Hills, and Miami Beach Candy and Samrat Ashok in Malabar Hills, and of course Chembur, some eight projects that put together. We're looking at this Upnagar and Deccan Pali Hills to come up in this year. And rest of the things, and probably by the next year, then we should be able to look at other projects coming up. As far as revenue recognition, as usual, the projects take somewhere anywhere from 3 to 5 years for the completion of the projects, and you will see the revenue recognition at that point of time.
Okay, and let's talk about your geographical presence. Any chance, Mr. Sasalu, that beyond Bangalore and Mumbai, and other than, beyond the south and the west, are you also going to be aiming at newer geographies?
See, we are a national developer. We are in 9 cities, and we have, as you know, that Bangalore is our home ground, and we are quite okay in Bangalore. Large, I should say. Cochin, our presence is really big. Chennai, we have significant presence. Hyderabad, we can do better. In Goa, that we are probably, our project Adora de Goa is the single largest project in Goa with 2,000 units. And then, of course, Pune and Mumbai, as you all know, that we have done well. So our current focus is on really consolidating our position in the current markets in the 9 cities that where we are in. I forgot to tell you about Coimbatore. We have significant presence in Coimbatore. In fact, we've got lined up a 1.2 million square feet launch in Coimbatore in this year itself. So what is left could be, if you're referring to NCR region, so that could be a future plan, and currently that we are not making any effort to go tomorrow. But in any way, that since we have a large scale developer, someday it's going to happen. I couldn't give you time at the day.
But at least that gives us an indication on what your geographical expansion plan is. So sounds optimistic over there. And also give us your sense on your outlook on the overall demand for premium real estate. You did say that demand looks resilient. So on the back of that, how is absorption doing right now across your key markets?
All our free market, the challenge has been for us on the supply side, not on the demand side. So wherever we are launching the project, and we see that there is a great uptake. For us, it's the supply side, because our brand is strong. We're a 50-year-old company, and wherever we have gone and wherever we have launched a project, and because of that, that ethos of the company, the customer centricity, and I don't want to go into too much of details about these things, but nevertheless, that our brand speaks for itself. Wherever we launch the project, we sell anywhere between 30 to 50% on our launches. So we are very, very comfortable. And of course, the consolidation helps, right? In any big city today, that you are not seeing more than 8 to 10 developers who are taking away most of the market today. So we are very comfortable in the way we want it. The supply side is the issue. Supply side is that, with all our best efforts, sometimes because of the approval process and other things, it becomes difficult for us to really match the time in which that we want to launch. But it's not all lost. It may be a quarter here and there. We launch those projects.
Okay, Mr. Sasalu, so that sounds optimistic. Thanks so much for your time today, and good luck for the quarters to come.
Thank you, Snehi. Thank you for having me.
Thanks so much. Okay, let's shift focus